coast to coast. Innovation is Canada's story. Let's tell it together.
Mulvihill's Canadian Bank Enhanced Yield ETF gives investors premium exposure to Canada's Big Six banks. With monthly distributions and a 7.1% yield, CBank is one of the highest yielding Canadian bank ETFs. Mulvihill.
AI, EVs, data, energy, all need one thing, copper. With demand outpacing supply, underexplored Peru offers a generational opportunity. Forte Minerals is ready with 4 drill-ready projects in Peru's most promising belts. 15 kilometers from Barrick's Pierina mine, Alto Ruri has delivered standout historic drill results. A proven in-country technical team, full funding, strategic backing, and a deep community commitment. Forte Minerals, Peru's next gold copper story.
Hive Digital Technologies isn't waiting for the future, it's redefining it. Hive is scaling its global footprint with speed, precision, and surplus green energy. Already tripling operations in 2025, Hive is on a transformative path to becoming one of the world's largest Bitcoin miners. Aiming to capture 3% of the global Bitcoin network, Hive is building the future of finance today. Hive Digital Technologies.
Beneath the surface lies tomorrow's potential. In Quebec's Abitibi, Wallbridge Mining is unlocking multi-million-ounce gold. Wallbridge Mining, unlocking the future.
Welcome to the second hour of The Open. Let's get to the big stories we're bringing you from our newsroom. Shares in Cameco jumping almost 20%. Brookfield Asset Management is also higher. Both companies are working towards an $80 billion U.S. agreement with the American government to accelerate the deployment of nuclear reactors. This is part of U.S. President Donald Trump's plan to scale up America's power-hungry artificial intelligence industry. He sees that sector as vital for competing with China. Those nuclear reactors are built as potentially generating reliable and secure power for U.S. energy grids and data centers. Shares in TMX are trading higher after the company beat estimates in its latest quarter. Revenue topped $400 million, up 18% from last year, and profit was a bit above expectations. TMX says the results were driven by an increase in derivatives trading and trading in stocks and fixed income. Shares in UPS getting a boost today. That's after the logistics company beat analyst estimates and profit estimates in its most recent quarter. The results were boosted by cost cuts, which involved eliminating 34,000 jobs this year. There was a reduction in drivers and package handlers, and the company also closed operations at 93 locations. The package and courier industry has faced significant disruption due to Trump's trade war. There's a look at the TSX holding its own today, lifted by Cameco and Celestica. It is still down, though, from the record high close, just north of 30,637 on October 15th. Let us have a look now at the U.S. markets, because they are trading in record territory once again. The S&P 500 on course for 6,900. Let me give you a quick scorecard for the year so far. Over the course of calendar 2025, the TSX has jumped 23%. Oops, but the NASDAQ is not far behind. In fact, it's almost 23%. The S&P 500 is up 17%. And let's have a look at oil. Oil is holding above the psychological $60 level. However, investors still worried about a potential glut in the global crude market. And let's have a look at gold. Hopes of a U.S.-Chinese trade rapprochement, if not an actual deal, have apparently dampened demand for a safe haven, and you can see gold has now dipped below that $4,000 US mark. And finally, let's have a look at our dollar, the Canadian currency, as up slightly but stuck below 72 cents US. Let's get more on the markets from Mark Sebastian, founder of Option Pit and Carmen Line Capital. Mark, great to see you. Talk to us about volatility. Is this a market, when we look at the S&P 500, where we're seeing big swings?
Yeah, it absolutely is. You know, over the last couple of weeks, we've seen average true range, which kind of measures how much the S&P is moving up and down on a daily basis, get up to about 1.2%. Now, without getting too deep in the weeds, the VIX measures how much the market thinks the S&P is going to move. The VIX is around 16. A 1.2% daily move is closer to a 19% daily movement, which tells me that options on U.S. markets are probably too inexpensive.
Too inexpensive. So if you were looking, if you're a big holder of stocks and you wanted to sell puts or calls, you're not going to get that much right now?
Yeah, you know, we have these giant covered call ETFs and mutual funds that are on a daily basis, weekly basis, monthly basis, selling option premium in a systematic fashion. And that's actually kind of changed markets a little bit, where, you know, for 20 years, 40 years, the assumption was options are always overpriced. Options are always overpriced. With this kind of dearth of option selling from all these funds, that's starting to flip, where we're seeing options on the S&P 500, the Triple Q, the Dow, and the Russell 2000 underprice event risk. Classic example, going into the weekend, you know, options were looking for about a $97 move on the S&P 500 between Friday to Friday. So think about that, 97 bucks. We've got a potential China deal. We've got, is the shutdown going to close or not? We have 5 of the Mag 7s reporting, the Federal Reserve, PCE. I mean, I don't know that we can have a heavier economic week, and markets are pricing at about a 1.5% move. The S&P rallied to $83 on Monday. That's kind of the way markets have shifted, and it's opening up brand new opportunities that, you know, I don't know that the general public has caught up to. But you know, case in point, again, options are just simply too cheap as we head into the Federal Reserve. They're pricing in about a 75-point move between now and Friday. Again, we moved 80 bucks yesterday, and we still have all this economic data in front of us.
That's interesting. I mean, we've had a huge rise in popularity here of ETFs that use a covered call strategy, supposedly to reduce yield for investors. I'm always a little dubious about that. And actually, in some cases, they've underperformed plain vanilla indexes, but we won't get into that. But it's interesting to hear Americans are keen, American retail investors, I guess mostly, are keen on these things, and it's infecting the entire option market.
Yeah, you know, you look at that monthly quote unquote dividend that they pay out from the option premium sell, they look interesting. You have to be strategic about them. Do they have a place in a portfolio? Potentially, yes. Should that be a primary form of investment? No, because you're right. Covered call funds do tend to underperform because they capture most of downside moves. And then when we get a move like we did on Monday, they're going to miss a chunk of that upside. So is there a place for them in producing some income for older individuals? Yeah, strategically, yes. But should that be a form of primary investment? I do not believe so.
Give us your thoughts on the markets generally. Are you seeing signs of overvaluation in the big indices?
Yes, I am. What I would say is we might be at a seminal point for the chip space. Qualcomm over the weekend coming out with their new competitor for NVIDIA's GPUs. AMD striking that deal with OpenAI. All the changes that are going on at Intel. Commodity traders, what is the solution to high prices? High prices. Obviously, the cycle for these AI is a longer cycle. But my belief is that in a couple of years, maybe sooner, we may be looking at a glut of AI chips. Where would that come from? Well, how much faster are these able to get? There is a point where you start running into diminishing returns. You have more competitors entering the market. And as AI build out does slow down a little bit, you have to wonder whether we run into a chip glut. And I'm not saying it's definitely going to happen, but that is 100% on the cards and something as an NVIDIA investor that should be kind of haunting me in the back of my head.
Do you feel there's euphoria in the air now? Because eventually the limits for AI growth will be reached, or at least the growth will flatten off.
Yeah, what worries me about markets is that a lot of people own the QQQ and SPY and believe that they're diversified. The top 8 stocks in the Triple Q make up over 67% of its value. That changes on a daily basis, so somewhere around 67%. Those same companies make up about 35% of the S&P. So if I own in my retirement a SPY and Q, I'm kind of over allocated to those those top 8 names that have kind of taken over the market. I know it sounds kind of ridiculous, but the Dow Jones Industrial Average, the Diamond ETF, with only 30 stocks, when you look at it, it appears to be more diversified than the S&P 500 and certainly the Triple Q. So what I worry about is the lack of diversification in the general public, and we get a sneeze in these kind of top 8 names and kind of takes the market down with it. I'm kind of migrating some of my investments out of the S&P 500, which is cap weighted, and looking for equal weight investment opportunities.
Thank you very much. Always great hearing from you, Mark.
Thanks for having me.
Mark Sebastian, founder of Option Pit and Carmen Line Capital. Coming up, we're going to check out a couple of today's notable analyst calls, including JP Morgan, hiking its price target on Rogers.
Good morning, everybody. Good afternoon to my friends across the pond. I hope everybody had a great rest of your Monday yesterday. And I hope, and we've got a nice day ahead of me on Friday. So, or here on Tuesday. So I love that everybody noticed I changed my shirt. So yes, I did change my shirt into something just, slightly more comfortable, but I still got the SIBO name, so you can know I'm a trader. Lou in Texas says, thank you on TSLL. Took out 30%, made 30% yesterday. And so anyway, Blue Shirt Tuesday. It is not a Blue Shirt Tuesday. There's only one day. It is Red Shirt Thursday. Yeah, TSLL, as a post-earnings trade makes a ton of sense. So my discussion on Bloomberg, right? You guys caught that, right? My discussion on being on Bloomberg was about the effect that these covered call funds are having on markets, right? How many of you are trading these covered call funds? How many of you own a covered call fund? Anybody? All right. There is a place for these. All right. There is a place for these. But I think the 0 DTE ones and the weekly ones are a problem. I am a covered call fund. At this point, take a look at how options are priced. Trading 66.80. That's 67.80. I want 66.80. We're trading 66.80, and it cost me about $80 to look at the rest of the month. All right. So what is kind of doing damage on those? The answer is these covered call funds, like SPI. So this is just one of those income funds, and they make sense. Yeah, they have a very high dividend, but they absolutely cap your earnings. So these weekly ones, they are the amount of you run into real issues with these ones that are selling dailies, because that's what's allowing the S&P options to be too cheap. And then, I didn't even Yield Max Amazon, right? These Yield Max funds pays a nice dividend, but really you're just taking money out of the stock. And you still take on all the downside risk. They are changing the way option premiums are priced. And here's the good news. It is to our benefit. Yeah, it's return of it's literally they're just giving you your capital back because you're losing money in it. Yeah, so there's a huge supply of short-term options being sold. How does that play into our hands? How does that play into our hands? Right? You've got a huge supply of individual names. SPY names. And all of these trades are primarily doing what? All right. They are selling calls. Some are selling puts. Some are doing both. So what would I do as a market maker if I knew I was going to get all this premium dumped on me on a daily basis? What do you think I would do? I'll tell you. Type 1, if you think I'd be fair and balanced and I would trade at a fair price with all these funds. Type 2, if you think I would absolutely crush these and make premiums as absolutely low as I possibly can to try and extract as much dollars as I can. Yeah, I would absolutely scumbag these guys. And does anybody blame me? No. I'm trying to make mine. I'm trying to make mine. You want to come out with some systematic problem, systematic selling thing, and you can convince people to give you money? I'm going to extract dollars from you. This is where Option Pit comes in. How many organizations out there have traders that are trading real money, trading their own money, trying to make money? Right? How many different firms put their own money behind every trade? Now, why is that so important? Why is that so important? Because if I'm always trying to give myself an edge and I'm seeing things change with my own P&L, I've got double the problems. One, I'm making less money, and two, you guys are making less money. And that's where what we're seeing and what we're talking about is going to put us so far ahead of everyone else, because we're telling you now is the time to get into to buy, not sell. And our returns show it. Now, strategically, there's always a place for option selling. You need to have somebody brilliant behind it. That's our boy Hans. But now is the time to buy. All right. Now, when to buy, though? In the S&P, whenever you want. But what about all these earnings? We got Amazon, we got Apple, we got Microsoft, Meta, Palantir, Tesla. All right, yesterday in the Ticker Highlight Show, we got you, the traders, long Tesla. Post earnings. Why was yesterday the day to get you into Tesla? Why was Monday? Well, take a look. Here's earnings. Premiums come down. Premiums come down. Premiums come down. Premiums find a bottom. We're up a little bit. And then what happens? There's starting to be a bid for options. Right. Options are super cheap. And yes, Ticker Highlight Show, people that are in TSLL, I know how happy you are. Look for a close today. I'm targeting about 50% on these. All right, well, one of my favorite stocks is Google. You know, I'm going to close my TSLL. Folks that are live with me, and I'll post this. I'm closing TSLL. Give me a second while I do that. All right. All right. So, getting back to business, we've got some big earnings. Google. We got Apple. We got Amazon. We got Meta, Microsoft, and Thursday and Friday, we got Exxon and CVX. Those are Friday morning. Now, let me tell you what I'm looking for. All right. We know these options are going to get absolutely slammed. All right. We know there's going to be some yield max covered call thing coming in and just absolutely smoking these things. What do you think the next step is in what I decide to go long or short in these trades? All right. So the stock has made its move. Earnings are out. Premiums are crushed. What am I looking for in my to make a trade? Well, what am I always looking for? The answer is option order flow. Yes. Big money flow. Big money flow. So we had some earnings last night that are really interesting. United Healthcare, PayPal, UPS, United Parcel Service having a day. And you can see what they've done to options. It's up big. We're going to get 1 or 2 more days of follow through here. Options on UPS will get down to about a 24%. And then I'm going to start looking for options. What, not today, but tomorrow and Friday. Tomorrow, Thursday, and Friday, I'm going to be looking to see, hey, is there any big, huge orders in UPS? Are there any big, huge orders in PayPal? So you combine options getting crushed, both by systematic and post-earnings plays. You lose the uncertainty of earnings, and you add in big money flow, and now you feel pretty confident about making money in this market. That's why you need to join Delta Strike. We're running 2 years for the price of 1. It's not applicable with any other offers. 2 years for the price of 1. You can click this link or you can call my team 888-872-3301. And if you are already a member and are interested in Lifetime, give my team a call and they'll take care of you guys. Give my team a call. So again, we are running this 2-for-1 special where we're going to take advantage of earnings, the overselling of volatility, and big money flow. The trades generated by Goldman and Citadel and the likes. And we're going to make ourselves some money on these post-earnings plays, similar to what we just did in TSLL. So give my team a call, 888-872-3301. Click the link and join me. I'm Mark Sebastian. I am your only option. Have a great rest of your trading week, guys.